Most traders don't lose money because they lack tools. They lose money because they refuse to remove noise. They stack indicators, chase signals, and react to every flicker on the screen. They call it analysis. It isn't. It's fear disguised as effort, fear of missing out, fear of being wrong, fear of sitting still while the market moves without them. The market does not reward constant attention, it rewards selective participation. Every false signal you take is not a technical failure, it is a psychological one. You saw movement and mistook it for meaning. You felt urgency and called it opportunity. You entered not because conditions were right, but because you could not tolerate waiting. That is not trading. That is emotional exposure. A real trend indicator does not predict the market. It removes you from it. It strips away the noise that feeds impatience. It eliminates the constant temptation to act. It forces you to wait until price proves itself, not until your emotions beg for relief. Most traders want confirmation of their bias. Professionals want protection from themselves. False signals don't come from the market. They come from the trader's need to be involved. Every unnecessary trade is a confession that discipline was weaker than impulse in that moment. The market is not fast. Your mind is, and the faster your mind moves, the more mistakes you make. The indicator that removes most false signals is not powerful because it is complex. It is powerful because it is restrictive. It says no more often than it says yes. It does not care how bored you are. It does not care how confident you feel. It does not care how much you want to trade. It waits, and waiting is the most painful skill a trader must learn. If you cannot sit through hours of nothing without interfering, you will never survive moments of pressure. If you cannot accept that most movement means nothing, you will keep paying for lessons you refuse to learn. The market is not your enemy. Your need for action is. Until you accept that, no indicator will save you. Traders talk about false signals as if they are accidents. They are not. False signals are invitations, and most traders accept them without question. They see a line cross, a candle break, a flicker of momentum, and they act. Not because the setup is complete, but because the mind demands engagement. The mind hates uncertainty. It hates waiting. It hates feeling irrelevant while the market moves, so it manufactures certainty out of noise. This is how accounts slowly bleed. The market does not trick traders. It tests them. Every unnecessary signal is a test of restraint. Every moment without clarity is a test of patience. Every small movement is a test of discipline. And most traders fail these tests long before the market delivers real opportunity. A trend indicator that removes most false signals does one brutal thing. It slows you down. It denies you the illusion of control. It forces you to accept that you are not meant to trade most of the time. That truth is unbearable for many. They equate activity with competence. They believe if they are not trading, they are falling behind. They watch price tick by tick, convincing themselves they are learning, when in reality they are training their nervous system to react instead of decide. Reaction is expensive. The market does not pay for speed. It pays for alignment. Alignment requires confirmation. Confirmation requires patience, and patience requires emotional strength. Most traders never build. They want the market to move for them. They want indicators to speak early. They want to feel smart before they are safe. So they enter before the trend is real, before structure is established, before risk is defined. Then they blame the signal. The signal was never the problem. The timing was. False signals hurt because they trigger hope first and punishment later. Hope convinces you to ignore risk. Punishment arrives to remind you that the market does not care what you wanted. The trend indicator that removes false signals does not eliminate losses. It eliminates weak entries. It keeps you out of trades that exist only to satisfy impatience. It filters movement until intention is visible. Most traders don't want intention. They want excitement. Excitement keeps them glued to the screen. It keeps them clicking. It keeps them feeling involved. But excitement has no loyalty. It disappears the moment price moves against you, leaving fear in its place. Fear is what ruins execution. Fear makes traders exit early. Fear makes them move stops. Fear makes them revenge trade. And fear thrives in noise. When noise is removed, fear has less fuel. When fewer signals appear, decisions become heavier. When trades are rare, they are respected. Respect is what discipline looks like in practice. The market moves all day. Opportunity does not. A professional understands this difference. They are not impressed by motion. They are impressed by consistency. They know that most candles are meaningless, most breakouts fail, and most signals are traps for impatient minds. So they wait. Waiting is not passive. It is controlled resistance. Resistance against boredom. Resistance against ego. Resistance against the belief that you must always be doing something. The mind fights this resistance aggressively. It tells you stories. It tells you this time is different. It tells you you're missing out. It tells you the indicator is lagging, the setup is obvious, the market is about to run. The mind lies under pressure. A disciplined trader does not argue with these thoughts. They ignore them. They follow rules built in calm moments, not impulses born in emotional ones. The trend indicator is not there to make you money. It is there to stop you from losing it unnecessarily. Losses will come regardless. But controlled losses do not destroy confidence. Random losses do. Emotional losses do. Losses taken without structure at T. Hack the trader's identity. That is why most traders spiral. They don't just lose money, they lose trust in themselves. Once that trust is gone, discipline collapses completely. The market senses nothing. But the trader feels everything. Every false signal accepted reinforces a dangerous habit. The habit of acting without confirmation. Over time, that habit becomes instinct. And instinct without discipline is fatal in this profession. The indicator that removes false signals does something unforgiving. It makes you wait while others trade. It makes you watch moves you are not part of. It forces you to accept that missing trades is part of survival. Survival comes before profit. Most traders want to win. Professionals want to endure. Endurance is built by avoiding unnecessary damage. Not every loss is necessary. Not every trade deserves risk. Not every signal deserves attention. Filtering is a mindset, not a setting. When you remove false signals, you also remove emotional exhaustion. You stop fighting the market all day. You stop making dozens of micro-decisions that drain discipline. You conserve mental capital. Mental capital is finite. Every impulsive trade spends it. Every ignored signal preserves it. Eventually, the real opportunity appears, clear, structured, supported by time, not hope. When that moment arrives, the disciplined trader is ready. Not tired, not desperate, not emotional, ready. The market does not reward those who see the most. It rewards those who act he least, but at the right time. If you cannot trust yourself to wait, no indicator will save you. But if you build rules that protect you from your own impatience, the market becomes simpler, not easier, but survivable. The enemy was never the signal. It was the hand clicking the mouse. Most traders blame false signals on the market, the indicator, or the strategy. That is the easiest lie to believe. It protects the ego. It avoids responsibility. But false signals do not hurt traders because they exist. They hurt traders because of how quickly those traders act on them. A false signal is rarely convincing on its own. It becomes convincing when impatience fills the gaps. The market is full of movement that means nothing. Small fluctuations, temporary pushes, emotional reactions, random liquidity grabs. These are not traps by design. They are neutral events. What turns them into traps is the trader's need to participate. The mind sees motion and demands relevance. It wants to be involved. It wants to prove it is sharp, early, decisive. That urgency is not analysis. It is discomfort with waiting. A patient trader can look at the same false signal and feel nothing. No excitement, no pressure, no fear of missing out. They recognize it for what it is, incomplete information. An impatient trader feels tension immediately. The body tightens. The eyes lock in. The internal dialogue begins. Just one entry. Just a small risk. Just in case. That just in case destroys accounts. Poor analysis can be corrected. Impatience cannot be fixed with more information. In fact, more information often makes it worse. The impatient trader collects confirmation, not clarity. They search for reasons to act, not reasons to wait. The false signal becomes a story, and the story becomes permission. This is why two traders can use the same indicator and get opposite results. One waits for alignment, the other anticipates it. One accepts being late, the other cannot tolerate being left out. False signals punish anticipation. They reward restraint. When impatience dominates, the trader enters before structure forms, before risk is defined, before probability is on their side. The loss that follows feels unfair, but it is honest. It reveals that the trade was never ready. The trader was... Over time, repeated false entries erode confidence, not because the trader is wrong often, but because they know deep down they acted too soon. That internal conflict is dangerous. It leads to rule-breaking, hesitation, revenge trading, and self-doubt. The trader stops trusting the process because they never truly followed one. Impatience is subtle. It disguises itself as decisiveness. It pretends to be courage. But courage in trading is not early entry. Courage is restraint. Courage is watching price move and doing nothing. Courage is accepting that most signals are not meant to be traded. The market does not reward the fastest mind. It rewards the calmest one. False. Signals are not enemies. They are tests. Tests of whether the trader can wait without suffering, observe without interfering, and remain disciplined when the market offers temptation instead of opportunity. Most traders fail that test, not because they cannot read charts, but because they cannot sit still. The market is constantly moving, but movement is not information. Price ticks up and down because orders flow in and out, not because opportunity exists at every moment. Most traders understand this in theory, yet ignore it in practice. They watch every fluctuation as if it carries meaning, and in doing so, they turn neutral noise into emotional pressure. Noise is not designed to confuse you. It exists because markets are alive. What confuses traders is their belief that every movement deserves attention. The mind interprets activity as urgency. When price moves quickly, the body responds as if something must be done. This reaction is biological, not analytical. Heart rate increases. Focus narrows. The trader feels compelled to respond. That response is a choice. The market does not force entries. It does not force exits. It does not force overtrading. All it does is move. Everything that follows is a decision made by the trader. Most losses begin not with bad analysis, but with the inability to let noise pass without acting on it. A disciplined trader understands that most price action is irrelevant. It does not threaten them. It does not invite them. It simply exists. They allow it to unfold without interference. They do not personalize movement. They do not assign meaning too early. An undisciplined trader reacts. They click first and think later. Noise feels important when the trader is emotionally invested in being right. They want validation. They want confirmation. They want to feel connected to the market. So they respond to fluctuations as if they are messages, when they are merely echoes of short-term emotion. The choice to react is often unconscious. Traders tell themselves they are managing the trade, staying alert, or being proactive. In reality, they are feeding anxiety. Each reaction creates another decision. Each decision increases mental fatigue. Eventually, discipline breaks down, not because the market was difficult, but because the trader exhausted themselves fighting noise. Professional traders are not immune to noise. They are immune to urgency. They accept that the market will move without them. They accept that missing moves is part of survival. They accept that their job is not to respond to everything, but to respond correctly when it matters. When you stop reacting, clarity improves. Patterns become obvious. Structure stands out. You begin to see how little of the market actually deserves risk. This is not because the market changed, but because you did. The trader who learns to ignore noise gains control, not over the market, but over themselves. And self-control is the only form of control that exists in trading. The market will always create noise. Only the trader can decide whether to listen. Most traders believe discipline means following rules when things are going well. That is not discipline. That is comfort. Real discipline begins when the market offers you something that looks good, feels good, and still must be ignored. The market presents far more opportunities than a trader can safely take. Price is always moving. Patterns appear constantly. Indicators signal endlessly. If you try to participate in all of it, you are not trading, you are reacting. Discipline is subtraction, not addition. It is the deliberate refusal to engage with anything that does not meet strict criteria. This refusal is painful because it goes against human instinct. The mind is wired to respond to stimuli. When price moves, the brain wants involvement. Ignoring that impulse feels unnatural, almost irresponsible to the untrained trader. That discomfort is the price of control. Every ignored opportunity strengthens discipline. Every unnecessary trade weakens it. This is why traders who overtrade feel exhausted, even when they are not losing money. They are spending mental energy on decisions that never needed to be made. A disciplined trader understands that opportunity is meaningless without context. A setup without structure is temptation, not probability. They do not ask, "Can I make money here?" They ask, "Does this deserve my risk?" Most of the time the answer is no. Ignoring opportunities does not mean fear, it means selectivity. Fear avoids the market. Discipline waits for the market to align. Fear hesitates when conditions are clear. Discipline hesitates when they are not. This distinction matters. Traders who lack discipline often confuse activity with progress. They believe more trades equal more chances. In reality, more trades usually mean more exposure to randomness. Randomness does not reward skill, it erodes it. The disciplined trader is comfortable being inactive. They do not feel guilty for doing nothing. They understand that capital preserved is capital available. They respect their own limits. They know their edge appears only under specific conditions, and they wait without negotiation. Ignoring most opportunities also protects emotional stability. Each trade carries emotional weight. Each decision creates attachment. By reducing the number of trades, the trader reduces emotional noise. They are calmer, clearer, and more objective when real opportunity appears. Discipline is not rigid control, it is consistent restraint. The market will always offer something to do. It will always tempt you with movement and possibility. The disciplined trader does not ask what the market is offering. They ask what they are willing to accept. Most traders fail not because they miss opportunities, but because they take too many that never mattered. Discipline is the courage to let those pass without regret. In trading, ignoring is often more powerful than acting.